Good morning, welcome to the ADS Securities Markets Update. The US dollar yesterday declined sharply across the board and the US dollar index lost more than 1.9%. First of all, the move began with the euro, which also advanced by more than 2% on hopes of a Greek deal in the coming hours. However, these hopes faded as the Eurozone noted that the Greek creditors are far from reaching a deal with Greece. Despite that, the US dollar also kept on declining following the release of the US figure, and this was an additional catalyst for a broader dollar selling during the US session. As noted before, we believe that the choppy range is likely to continue ahead of the NFP or ahead of the US jobs report on Friday, in addition to the Federal Reserve decision later this month. And it is therefore reasonable to stand aside for the time being and wait for these outcomes. Looking quickly at the US fundamentals yesterday, which keeps our view for no rate hike by the Federal Reserve in June meeting. Yesterday, the factory orders, or beginning with the ISM in New York, it declined by more than expected toward 54.0 in May, down from 58.1 in April, while it had been anticipated to decline slightly or to tick lower only toward 58. And this is also the lowest reading since almost 2 months. However, the factory orders also declined by more than expected, losing 0.4% in April after rising by 2.2% for the month before or in March, while the estimates pointed to a decline by 0.1% only. In addition to that, the year-over-year factory orders in the US also posted the sixth monthly decline in a row, declining by 6.4% for the month of April after declining by 5.2% in March, and this is the longest declining streak since 2009. The Federal Reserve Board member, also one of the Federal Reserve Board member, came in today and showed a dovish tone and saying that Q2 GDP is unlikely to rebound and meet its estimate. And she added also that the weak export, along with the Chinese slowing down and the global headwind, is also affecting the US economic recovery pace. And this could be the perfect excuse for the Federal Reserve not to raise rates in June and buying more time instead. As for the Asian session today, there were also two economic releases from Australia and China, which had a notable impact on the market. But beginning in Australia, the Q1 GDP came in much better than expected, rising by 0.9% in Q1 compared to 0.5% in Q4 of last year, while it had been anticipated to rise by only 0.7%. And this is also the highest growth rate since Q1 of last year. However, the year-over-year GDP slowed down further toward 2.3%, posting the fourth slowing down in a row, and also the lowest growth rate since Q4 of 2013. The Aussie also advanced sharply following the release or following the announcement, and rising to as high as 78.19 before easing back towards 77.90 so far. However, forming a potential reversal on the 4-hour chart, basically because of the resistance level, which stands at 78.03, which represents 61.8% Fibonacci from the recent declines from the 22nd of May highs toward the 1st of June lows, and this is a key level for the time being. A break above that level break above that resistance is needed to clear the way for further gains. Otherwise, another downward pressure could be seen back towards 77.60s and 77.20s. In China, the HSBC Services PMI also came in slightly better than expected, rising toward 53.5 in May, up from 52.9 in April, while the estimates were to rise toward 53.3 only. And this is also the fourth monthly increase in a row on the highest level since September of last year. Before going into the European session today, let's have just a quick look at the dollar yen yesterday. The pair failed to break above the 125 resistance area and retreated back toward 23.70s until this report also. However, this is the first attempt to break above that level since 2002. Another attempt could be seen, and if so, or if the pair failed to break that level, a major correction could be seen in the next few weeks back toward 122 and even 121 as well. As for the European session ahead, there are many economic releases and events which are likely to have a major impact on the market across this session. But first of all eyes today will be on, or will be focusing on, the Services PMIs from Spain, Italy, France, Germany, the Eurozone, and also the UK. And the estimate points also to a slight decline in Spain, Italy, and also in the UK, while Germany, France, and the Eurozone are expected to remain unrevised for the month of May. In Italy, the jobs report also will be released today during this session, and the monthly unemployment rate may decline toward 12.8%, down from 13%, and the quarterly unemployment rate may tick lower toward 12.9%, down from 13%. In the Eurozone, we believe also we will be waiting for the retail sales and the unemployment rate. The retail sales may rise also by 0.7% in April after declining by 0.8% in March, which would be also the biggest monthly increase since January of last year. Finally, the Eurozone Unemployment rate also may tick lower toward 11.2, down from 11.3, which also would be the lowest reading since April of 2012. Before beginning of the US session today, the ECB decision will be released at around 11:45 GMT, which is expected to remain unchanged, while the market will be waiting for Mario Draghi's press conference at 12:30 GMT time. The market today is hoping for a more dovish tone following the recent rise in the European bond yields, in addition to the notable rise in the euro exchange rate. As for the US session today, another series of economic figures will be released today, which is likely to push the volatility even higher today. But the ADP non-farm employment change is expected to add around 198,000 new jobs in May, after adding around 169,000 new jobs in April, and the market is hoping for a notable recovery to support the idea of a rate hike in the coming few meetings by the Federal Reserve, especially after the recent disappointment. However, if so, this would be also a proof that the recent slowing down was weather related. Otherwise, the uncertainty is likely to expand sharply in the market ahead of the US jobs report and the Federal Reserve decision later this month. In addition to that, the trade balance deficit is expected to narrow slightly toward minus 43.9 billion in April, compared to minus $51.4 billion in March. And finally, the ISM non-manufacturing PMI is expected to decline slightly toward 57.1, down from also 57.8. However, the decline in the manufacturing PMI usually has a positive effect on the services sector. Therefore, there is a possibility for better numbers from the ISM non-manufacturing PMI today, despite the fact that the estimates points to a weaker number. If the US figures today disappoints, again, the US dollar may get another hit larger than the one we've seen yesterday, while a positive outcome may keep June's rate hike on the table again. Thus, the US dollar may cover some of its yesterday's losses. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.